Hey traders, in this video we're going to talk about using the 5-day 5-minute market profile with open gaps and VPOCs. I'm going to kind of walk you guys through why I draw these on there, and I will leave a link down below with all my current levels as of August 5th, 2022. So if you're watching this video in the future, they're probably going to be irrelevant, but I'm going to kind of show you why I use them, how I use them, and things like that. So, but first, make sure you check out my website, daytradingfearless.com, $99 S&P E-mini future trade zones, which look very similar to this. So these are support levels, right? And then we have resistance. So as we came down, and this happened earlier this week, this was one of our trade zones that I released over the weekend. We came literally right to it. And look at this massive bounce we had, right? It's $99 lifetime subscription. Plus you get a 7-hour video course of my top 5 trading strategies, all that, links down below in the description. But let's kind of move forward with this video. So I'm using a 5-day, 5-minute market profile chart, okay? And essentially it's regular trading hours only, so I'm able to see any gaps, right? I do not want extended trading hours with this. But what I do is every morning, okay, I come in and I look for any open VPOCs, or a VPOC is a virgin point of control, never been touched, or a open gap. So this morning we had the jobs number, okay, and we actually gap lower. We actually opened way down here, and look where we opened, right on this VPOC, right? Because the reason this is a VPOC is this price action right here never came down to test the prior day's point of control, so it becomes a virgin point of control. And with that being said, we leave these open until price comes back down. So what happened was we kind of opened here, came down. Okay, we also had a open gap from this day that never came back down. But price, even though it fell, never came down to fill the gap yet, right? So what we're going to do is we're going to take this and we're going to remove it. Because it's now been fulfilled. And I just want to show you guys how perfect these levels could be, right? And look at this. We rally all the way up, and here we have what is a gap and a VPOC essentially at the same level, right? So think of it as even more confluent. So we're going to remove these guys. And look at the rally all the way back, right? So we had the gap here. This is where price closed, and we also had the point of control, okay? But price opened way down here, kind of on this one, and this was kind of a perfect ping pong, right? Kind of bounced off there, came right and filled the gap in the VPOC, and now that's gone, and this is all we're left with for next week, right? Now, we do have multiple things down below, right? And one of the reasons I have them stacked like this is because they've never been touched yet, right? So this kind of gives a structure of market, even though, because if we look, we've been rallying for the last couple weeks straight up. And if we kind of go out, we'll use a 90-day, right? We have all these gaps that have never been filled. We have VPOCs that have never been filled because we're just doing gap and go, gap and go, gap and go, and keep rising higher. And so what happens is eventually, more than likely, these will get filled sometime in the future. Now, that could be next week. It could be a year down the road. But what happens is you'll have liquidation breaks, and then all these will eventually get kind of taken care of, and it'll clean up the entire chart. If we roll back over, all this will be taken out, which is a good thing because it gives us structure. It's kind of the retest of those specific levels that were really relevant for that day. Now, when we do roll our future contracts every 3 months, what I like to do is start from scratch. I don't carry these lines over. So if we were to go into the Z, right now we're in the U contract, the September, right? ESU 22. If when we go over to the Z contract in September, I'll erase and I'll start from fresh, because I don't like the whole roll. It makes the charts even messier, and a lot of times they don't match up. So I want to use what the current contract gives. So hopefully this helps, guys. If you like these videos, make sure you guys like and subscribe. And I will leave a link to this chart down below. So if you kind of want to start to follow along with this, you can. And this video will be released probably Monday or Tuesday of next week. So maybe Mondays might not be on there, but everything should be relevant up to this day because we've taken care of all this above. What would happen is on Monday, if we closed right here, we'll say, okay, if we gap up, then this will be, or gap down, this would be our gap, and we would just right click, duplicate, right, and then move it up, or just right click it in there, go here, and then just type in whatever price level that would be. So we'll say 41.40, like this, right? And it would look something very similar to this. So it's an easy way, and just take them off, add them every single morning. So hopefully this helps. Again, as always, thank you for watching, and we'll talk to you soon.